Good morning. It's Monday, November 11th, about 6 a.m. Central Time. Overnight, the precious metals are mixed to slightly lower after Friday's washout in a volatile week. Looking at the overnight price action, we do have December gold down $25 at 26.69. High of the overnight session, 26.93. Market trading near the lows of the session, 26.65.80 being that low. Kind of our line in the sand closer to 26.50. Looking at the December silver futures contract, had a volatile range in the overnight session, 31.66 the high, 31.19.5 being the low. That low area comes down to a key level of support, so you don't want to see markets close below there. Looking at the copper market, down 220 at 428. Aluminum down $41. Platinum up $5. Platinum really was hit with the palladium market on Friday, so a small recovery, perhaps just a bit of short covering. Other outside markets, U.S. equity stronger, cryptocurrency stronger. You've got crypto fever right now. I suspect much of the sell-off in the gold market, in the silver market, is a rotation to people chasing some of those assets like Bitcoin and Ethereum, which are pushing the overnight highs. Then you have crude oil futures down about $1.12 as we see some of the geopolitical risks coming off just a bit. And then remember Trump's initiative, drill baby drill. So what's changing in the gold market right now? That's what a lot of people have been asking here. So investors are assessing the path of interest rates following the Federal Reserve's latest meeting and the implications for the economy after President Trump's victory. Gold suffered one of its worst declines here, worst weekly declines since last May, while yields and a dollar index strengthened. So remember last May, that's when many of these commodities here, your copper led the charge, silver followed suit, and also gold futures all pushed up, and then they had a massive sell-off after. So with the Republican sweep now looking likely, traders are betting on fewer interest rate cuts in 2025 as the president pushes through more tariffs, lower taxes, looser regulation, which should increase inflation. So if you look at where we're at right now, obviously Trump had won. They had won the Senate as well. And then the House right now is 214 to 205. You need 218 to win. So getting very close there. So other things to note is that on the U.S. equity markets, a lot of people are looking to try and position it and buy the dip. There's two levels you want to look at, or two things, observations you want to take into consideration. One, you do have the volatility index selling off. So the VIX here finished down to 1494. That was down 32% last week. It was the biggest 1 week drop, and it's since December of 2021. When the VIX crashes and U.S. equities go up, you very rarely get any kind of volatility in the markets. You're going to have to keep things very close if you're going to enter into the market. Any corrections without any kind of news drivers coming out are going to be very shallow in nature, and your line in the sand is going to be that election night, that gap on the market there. So keep an eye on that as your line in the sand. So the S&P 500, they finished the week about 4.7% higher. The Dow Jones ended up 4.6% higher, and the NASDAQ gained about 5.7%. So looking at some things here, back to the gold market, the ETF flows are showing the total known gold ETF holdings, they fell for a fifth straight day to 83.66 million ounces. So if you look, they've come up quite a bit and they're starting to sell off. You look at the way that managed money is positioning, is it's really starting to flatten out in that gold market. So I just suspect that this rotation is underway out of the precious metals markets into U.S. equities and into the crypto market as well. If you're going to play crypto with us here, and also remember there's a micro Dow, micro S&P, micro NASDAQ contract, micro Russell. We also have the large contracts and all of those. We do have the micro Bitcoin. It's 1/10 of a Bitcoin. So for whole round number purposes, if Bitcoin is at $80,000, the product that you're trading is 1/10 of it, so it's $8,000 worth of Bitcoin. The margin requirement on that's going to be $2,300. So you need $2,300 in your account in order to control $8,000 worth of Bitcoin. Every $1,000 move Bitcoin goes up or down is going to be $100 change in your account. So looking at a $5,500 increase, that's going to be $550 per contract that an account would have gained being long the futures contract from Friday to right now as of this recording. The inverse if you were short it, because on futures you can easily go long or short, you'd be down $550. Not a recommendation to go long Bitcoin. I'm just laying out the contract specifications to you guys. So a few other things we're going to be watching here today. Investors this week are going to be closely watching the US CPI on Wednesday. We expect a small uptick on that. The PPI on Thursday, and then Fed Chairman Powell's speech. It comes out right near the close of the session on Thursday, so the ramifications probably won't be seen until really Friday, and then Friday we have retail sales and industrial production. Now today is Veterans Day. Happy Veterans Day to all of you out there. So the banks are going to be closed. So if you have margin problems, you're going to have to most likely reduce your positions here. So again, overnight session, bit weaker here on the metals. Now they're all turning red across the board. So the key levels that people are going to really be watching here, you do have the gold market trading at the 50-day moving average for what it's worth there. However, you don't want to see futures trade below. It was really the seventh low. That low of that session was 26.50.30. That's going to be kind of your line in the sand. A lot of analysts are calling out there for $2,500 gold, so be aware of that and what kind of ramifications it would have on the silver market. Silver futures are barely holding trend support here at 31.17 last. We break below there, it could be a washout down to $30. And then the copper market is starting to break down too, but widely volatile in its range because traders are still looking at what kind of aggressive stance will China take, and what is China's stance on Trump coming in here. They've announced certain stimulus measures, and they've taken some reactive measures to counteract their deflation and their debt, and we've seen their exports pick up quite a bit, but it's their imports that are really lagging, and that's a problem. They need to import more as they're the largest importer of the copper market, then turn that product around and then ship it back out, and they're really concerned about the inflation, and they were already in a bad state. Now, some of the Chinese officials have stuck hard to their 5% GDP target and anticipate that target going out into next year as well. So we'll see what happens. I think China might be taking more of a wait and see type approach before they start to really deep down dive into more stimulus type measures. One last thing, the CME's Fed Watch tool shows a 68.5% chance that the Fed does cut rates at the December 18th meeting. However, going out to 2025, it looks like about 2 interest rate cuts are factored into the market. So some of this action in the gold market is really starting to level out here. So might be a little bit difficult here. Keep your stops pretty tight, and then also ratchet down your upside targets here because of the fact that it looks like the volatility might be swaying to the downside on the gold market. It might be more liquidation coming ahead. So keep everything tight as far as your trading is concerned. You got any questions? I'll be on CNBC at 1:30 Central Time. I'm supposed to be covering either copper or silver, but I suspect that with the rally in the Bitcoin market and the cryptos, they might shift me to covering that market instead. So stay tuned. I'll keep you guys posted. You got any questions, give me a call, 312-858-7303. Remember, futures option trading does involve risk of loss. May not be suitable to all investors. Good luck, good trading.